Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
Let's start with Microsoft and Amazon. We just have headlines of Microsoft investing up to $5 billion in Anthropic. But then what we're looking at is a big downgrade, a rare downgrade. So Redburn is cutting their ratings for both Amazon and Microsoft to neutral previously and this is the first time it happened since they initiated coverage in 2022. This is very rare. Like, those companies have pretty much 90% positive rating. There are no sales, no sale ratings, and very rare to get even neutral. The issue is the bull case for generative AI is no longer clear, and hyperscalers should be approached. This is what Redburn says. The criticism is pretty harsh. They say industry Gen AI narrative looks increasingly misplaced. In 2022, they initiated the coverage for Amazon and Microsoft. They had a buy rating. The same analyst recently had a sell rating on Oracle, and obviously that was correct. The company is down about 25%. Since that, we see the sell-off today. Obviously, tech stocks are dragging the indices down. The Nasdaq has raised around 1.8 trillion of value since October peak, and obviously those fears are continuing to rise. And for the last few weeks, we've seen a lot of pressure on those AI darlings and favorites that brought indices up for 3 years.
Okay, let's steer away from technology and go towards Home Depot.
Yeah, everyone's worried about consumer, and Home Depot is giving a pretty bleak forecast there. The ticker, of course, is HD. The stock is down more than 3%. The company cut its full year earnings guidance. They're warning that unsteady consumers are hitting the pause on big home purchases. The retailer said it expected adjusted earnings per share to decline 5% from a year ago. The company said its profit and comparable sales came in lower than expected. The stock is already down year to date 11%. It's been really hard. Obviously, the housing market has been frozen. Add to that tariffs and additional challenges for Home Depot. They have seen some of the metrics doing well. They've been trying to grow operation, boosting online offering, trying to attract all those do-it-yourself consumers that have been all over TikTok and Instagram. But still, that's not enough. And the earnings report was far from received well.
All right, one more. What do you got for us?
And we have aerospace and automation technology provider Honeywell. Shares are down about 2%. It's coming off another downgrade, but this is a double downgrade. So the company was previously buy, and now it's sell. The downgrade is coming from Bank of America. It's the only sell rating in Bloomberg data. The ticker is HON. The stock is splitting up in two companies. That's been going on for some time. One is dedicated to aerospace and the other to automation. But Bank of America is not excited about that. The bank says shares are going to lag as elements of its spinoff strategy disappoint investors. The company has only one sell rating. It's not common to get this. It's already down 10% year to date. But clearly the spinoff and the new CEO they have, which is actually an internal one, Bank of America is not bullish about this.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.